world's rich and powerful have arrived at Davos in Switzerland for the annual World Economic Forum, which kicked off today. Now, the chaos over Brexit, slowing growth in China, globalization and free trade will dominate conversations over the next few days. Meanwhile, the International Monetary Fund expects all of the above triggers to take a hit on global growth over the next 2 years. The IMF has trimmed its global growth forecast by 20 basis points to 3.5% for 2019 and by 10 basis points to 3.6% for 2020. However, it has retained its India forecast at 7.3%. Shireen Bhan now joins us from Davos with a very special guest. Shireen, over to you.
Our continuous coverage here from the World Economic Forum in Davos is on, and joining us now is the Chief Economist of the IMF, Geeta Gopinath, making her first appearance here at the World Economic Forum in her new capacity. Congratulations, Geeta, on your new appointment, and thanks very much for joining us on CNBC TV 18. You've just presented the World Economic Outlook, and it looks bleaker than it did in 2018. In order of priority, what would be the most significant risk facing the global economy today?
There are two major risks. One would be an escalation in trade tensions, and the other would be a worsening in financial conditions. Because relative to 2018, what we've seen is that the two have become intertwined. And so that poses major risks to the global economy.
You know, Christine Lagarde talked about this new multilateralism, but clearly at this point in time, global leaders like President Trump don't think much of multilateral institutions or multilateral frameworks. So what hope do you have of this new multilateral order to take off?
We need to have cooperation. We need multilateral institutions to address many of the issues that we're facing. In fact, one of the things we point out in our outlook is that one of the immediate actions that need to be taken is for countries to come together and resolve the trade differences and do that quickly. So that is a very important factor that we require for growth to continue in the global economy.
But do you feel confident of that, especially in light of the conversations and negotiations that are on between the US and China? One day it seems like it's moving forward, the other day it looks like it's status quo. What's your own sense of being able to break through on some of these crucial trade negotiations?
So compared to our October 2018 outlook, if anything, there's been an improvement in the trade sentiment. So the G20 meeting in Buenos Aires, which was a coming together of US-China, trying to work out their trade differences. So those are pluses. There is uncertainty, there's no doubt about it, and that will remain, but we have to resolve this as soon as possible.
Brexit, and that is one of your most immediate key concerns for global growth as well as the global economy. How much lower do you see the forecast trending if you don't see trade negotiations between US and China kicking off in the manner that we expect and the Brexit uncertainty were to continue?
Those are two very important risks. We already talked about US and China. In the case of Brexit, our forecasts for the UK to stay in the free trade area and the transition to be smooth. If that changes and there is a costly no-deal Brexit, then that can have very important consequences for UK and therefore for the world economy.
Let me ask you a few questions on India now. 7.3%, that is the outlook as far as India is concerned for 18-19, slightly higher for 19-20. What would you be watching out for when it comes to the Indian economy, the next few triggers?
Indian growth is high. We still say that it is the highest growth rate for a large economy, so that's a big positive. The other positive is actually we forecast growth going up in 2019. And that's because of two factors, the lower commodity prices, and the other one is that we expect, because of the low commodity prices, the weaker impact on inflation, that monetary policy would be more neutral and more accommodative. Those are pluses. But going forward, I think that the big challenges for the Indian economy would be job creation and would be reforms for the agricultural sector.
This business of doubling farm income by 2022, which is the aspiration that the government has, as you look at where things stand today, do you believe that that is realistic? And what would the policy imperatives be in order for us to be able to get there?
There is a tremendous amount of distress in the agricultural sector. I believe that farm loan waivers don't solve the problem on any kind of a permanent basis. We certainly need to insure our farmers against very volatile food prices, but we also need to work with giving them better technology, better seeds, better...
An income support scheme?
A cash transfer would absolutely be better than loan waivers. It would be more broad-based and would keep the incentives aligned.
A universal basic income, and this was an idea that Arvind Subramaniam had touted in his economic survey. We don't know whether the government will do it or not, but do you believe that's a good idea? That should be something the government should consider?
The universal basic income in its original form is unlikely to be implemented in any developing country, because that implies giving money to every single citizen in the country, including the very richest. The question is about targeting the most vulnerable parts of society, and there are many schemes already in place that try to do that, and we just have to make sure that it is more effective.
Mm-hmm. I want to ask you about what you're seeing at the Reserve Bank of India. And the IMF did say that it was looking at the developments at the RBI very closely in light of Urjit Patel's resignation. There's now a capital framework committee that's been set up looking at the use of the RBI's capital reserves. How is the IMF looking at this issue?
We very strongly kind of call for operational independence of central banks, not just the RBI, but central banks all over the world. And that is very essential to maintain macroeconomic stability. There is nothing wrong in having a committee set up to discuss issues that are relevant both to the central bank and to the government. But when it comes to important decisions on the operational side, it has to be independent.
But what should be the guiding parameters as this committee looks at the issue of capital reserves and whether the government should be able to access them or not, to your mind?
The question is that does the Reserve Bank have enough reserves to maintain macro stability for the economy? Reserves can be quite fickle, and they can change very quickly in a very short amount of time. So that has to be kept in mind.
There's a clamour in India for a repo as well as a CRR cut. The previous governor didn't believe that CRR cut was an adequate tool, especially when it comes to liquidity management. But what's your take given the global context and where things stand in India?
I mean, we do not prescribe very specific policy instruments for any country, and that would be up to the Reserve Bank of India to decide on that.
Have you had a conversation with Raghuram Rajan? He was the chief economist at the IMF as well, and of course you know him really well. Any words of advice that he may have given you? Any conversation that the two of you have had?
Raghu has been a great friend and mentor for many years, and so yes, we've been talking, and has always given me great advice.
Geeta, always a pleasure. Appreciate you joining us here on CNBC TV 18. Thanks very much for your time.
Thank you, Shireen.
Well, that's Geeta Gopinath, the chief economist at the IMF. For now, it's back to you.
All right, thank you very much for taking us through that conversation. So Geeta Gopinath there, the chief economist for IMF, highlighting some of the key risks for India and the global economies. Now, the other big talking point at Davos is the widening inequality. The latest report by global non-profit Oxfam shows that 26% of the richest people own as much wealth as the poorest 50% of humanity. In India, the richest 9 people own as much wealth as the bottom 50% in the country. Oxfam is pitching for 1% wealth tax, which can raise over $400 billion, which is enough to educate every child in the world who is currently not in school and provide healthcare that can prevent 3 million deaths annually. Moving on then, China's economic slowdown is now official. In 2019, the economy grew at 6.6%, which is the slowest pace of growth in nearly 3 decades. The Chinese government has been calling this a managed slowdown, and markets seem to be buying that, with most Asian indices ending in the green even after this growth data was released. China is also engaged in a trade spat with the United States, which has come as a double whammy, with consumer confidence already on the wane. CNBC's Eunice Yoon reports from Beijing on the latest GDP data and how Chinese officials are reacting to it.
The Chinese Statistics Bureau attempted to put a positive spin on the numbers, saying that China's growth is still stronger than Europe's, the US, or Japan's, and that this year would see reasonable growth. However, most economists expect the economy here to slide further, with Beijing stimulus measures kicking in by the second quarter at the earliest and more likely in the second half of the year. 2018 GDP was 6.6%, and growth in the fourth quarter indicated weakening momentum, coming in at 6.4%. Fixed asset investment missed, up 5.9% instead of the 6% that analysts were looking for. Real estate FAI growth slowed. Property is a big driver for the economy and an indicator for future construction activity. December factory output numbers and retail sales held up pretty well, up 5.7% and 8.2%, beating or meeting expectations, but still down compared to earlier in the year. One important data point for Beijing policymakers, unemployment. The jobless rate rose to 4.9% for December from 4.8% in November. Part of that is because of weakness in the export sector. Uncertainty triggered by the threat of U.S. tariffs caused some companies to delay investments and hiring. The Statistics Bureau said that Beijing would continue to roll out new measures to help stabilize the economy as authorities here battle what the Bureau described as an external environment that is complicated and difficult. Eunice Yoon, CNBC Business News, Beijing.
All right, Eunice, they're reporting on the Chinese slowdown that is worrying policymakers across the world. Now, the big development from the court corner then, the Supreme Court has expanded the scope of investigations against Volkswagen following the 2015 global emission scandal, or Dieselgate. The Supreme Court has said that they would leave it to the NGT to decide if other car makers should also be probed for possible violations of regulatory norms. Ashmit Kumar joins us with the very latest. Ashmit, take us through what the court said today.
Well, for all effective purposes, it appears that the Apex Court has opened the door for the scrutiny of the NGT to be extended to all the other car makers with reference to the Dieselgate saga, with reference to compliance with emission norms. Now, keep in mind that Volkswagen was the company that had moved the Apex Court in challenging the 100 crore rupee penalty that has been imposed by the NGT. And as an argument that Volkswagen counsels used, they essentially put forth before the Apex Court that the ARAI report that has been submitted before the NGT suggests that they are in compliance with the local emission norms, with the BS4 emission norms, and that with that in mind, their counsels argue that there is no case that has been made out for singling out of Volkswagen and why the other car companies should also not be subjected to similar scrutiny. Now, taking note of that, what the Apex Court today has done is that it has refused to pass any findings or judgments in this particular matter. It has, however, remanded the matter back to the NGT for considering what the future course of action could be. But with that, it has added an all-important caveat. The Apex Court has said that the NGT will be at liberty to consider if the scope of this investigation should be widened to other car companies. Having said that, the other takeaway, of course, also needs to be mentioned here. The Apex Court reprimanded the NGT for what it called was coercing Volkswagen into paying that penalty of 100 crore rupees. It said that it was neither proper nor appropriate for the NGT to have passed such orders, threatening even arrest of Volkswagen India officials, given as how the Apex Court had granted more time to the company to come back with the penalty. So that, of course, is the second aspect. But, of course, the big takeaway being that the scope of the investigation now possibly could be widened to other car companies as well. That's a question that the NGT will now have to answer. Back to you.
All right, Ashwin, thank you for joining in. We'll leave it at that, but it's time now for a short break on the show. But coming up next, Kotak Mahindra Bank might be looking for an out-of-court settlement with RBI on the promoter shareholding matter. More on this story when we return. Welcome back. You're still with CNBC TV 18 watching What's Hot. Now, we learn from sources that Kotak Mahindra Bank may look for an out-of-court settlement with RBI on the promoter shareholding matter. Now, remember, Kotak had earlier moved the Bombay High Court against the Reserve Bank of India after its promoter, Uday Kotak, was barred from reducing his stake in the bank through a preferential share issue. Now, sources say that the bank remains continuously in talks with the RBI, where an out-of-court settlement is an option that the bank could be looking at. Remember, Uday Kotak's current stake stands at 29.6%, as against RBI's mandated 20% by December of 2018. Now, in what comes as a fresh setback for debt-ridden IL&FS, rating agency CRISIL has downgraded the rating of debentures that were issued by Jharkhand Road Projects Implementation on Company from BB to AA. Now, Jharkhand Power, remember, is a special purpose vehicle, or SPV, that is owned by IL&FS Transportation Networks, the infrastructure finance company that is now under the NCLT bankruptcy process. Now, CRISIL says this downgrade is because of higher chances that the SPV company will default on its debt payments following a change in stance of the company's management. Lata has more on what this downgrade could mean for banks and mutual fund investors. Lata.
Well, we need to understand that the SPV, that is Jharkhand Road Projects, has not yet defaulted. CRISIL has only brought it down from AA to BB. When they default, it will become D. But what CRISIL is telling us is that the management of Jharkhand Road Projects has changed its stance. Earlier, the expectation was IL&FS, the holding company, is in default, but various projects that it had financed were still able to meet their loan payments because they had escrowed amounts. That is, whatever toll money they would collect will go into a bank account, which is ring-fenced. And from that, they were paying the interest on debentures, bonds, and on loans. But now, Jharkhand Road Projects Management has written to IDBI trusteeship, which is its trustee, saying don't make any future payments. This is because the NCLAT in its October order, ordering the restructuring of IL&FS, had said that all the SPVs of all the subsidiaries of IL&FS should be part of the restructuring process. I don't know the exact legal language, but because Jharkhand Road Projects has written, now the expectation is that all other SPVs also will be told not to make payments till the overall restructuring is done. And therefore, chances are many banks which have lent to these SPVs will be forced to classify those loans as bad loans or as doubtful loans. Until now, they had only classified the holding company loans as bad loans. Likewise, mutual funds which own the debentures of these SPVs may also be forced to mark their paper down to D and therefore to zero value. This could create a bit of a problem. I just want to remind you, they are not yet in default, but they are soon expected to be in default.
All right, Lata, we'll leave it at that. Now, a quick look at some of the national headlines that we're tracking. Karnataka has declared a 3-day mourning after the death of prominent seer, the 111-year-old Shiv Kumar Swamiji, who passed away after age-related ailments. His death was announced by the state's Chief Minister Kumaraswamy, flanked by opposition BJP leader Yediyurappa. Prime Minister Modi and Rahul Gandhi have also tweeted their condolences. The Indian Navy has abandoned efforts to retrieve the dead body of one of the 15 miners trapped in a coal mine in eastern Meghalaya. The dead body was spotted 4 days ago, and the Navy says there was too much disintegration with every pull. It has now been 35 days since the miners got trapped after accidentally puncturing the wall. The West Bengal government has denied permission for BJP's President Amit Shah's chopper to land at an airstrip in Malda ahead of a rally tomorrow. Citing upgradation work, the state government has allowed chopper to land at the ground opposite a hotel. Now, this decision has sparked a war of words between the Trinamool and the Bharatiya Janata Party. 2 days after 23 opposition parties came together for a show of strength in Kolkata, Finance Minister Arun Jaitley has hit out at the alliance, saying it is driven by a negative anti-Modi agenda. In a blog, Jaitley has dubbed the 2019 elections as Modi versus chaos and slammed the Kolkata rally, saying it lacked positive ideas. Now, we are just a little over 10 days from Budget 2019, and as we count down, North Block has marked the beginning of this budget document printing with the customary halwa ceremony, after which officials who are directly associated with the budget making and the printing are cut off from their families till the presentation of the budget. With that, it's a wrap on this edition of What's Hot. Thank you very much for watching. The last read opened the week on a strong footing led by strong Asian cues, and the Nifty flirted with the 11,000 mark but ended off the high point of the day, while the Sensex rallied about 0.5%. Coming up next is Markets Today Talkback that will take all the action forward.